Risk management means you decide in advance what you do after a loss, and you don't negotiate with yourself in the middle of emotion. After a loss, your brain wants to regain control. That's biology, not weakness. Hey friends, Aaron here. There's one thing I repeat all the time because it saves accounts. A strategy without risk management isn't a strategy. It's like a car without brakes. Sure, it can go fast, but the question is, how long will it last? And here's the most important part. Even if you have 70% accuracy, you can still blow your account if you don't have risk rules. No, sooner or later, it's almost guaranteed. Today we'll break down why that happens, what mistakes destroy even strong strategies, and what simple rules turn trading from a gambling race into a controlled process. If you want more useful info, breakdowns, and working rules, check my Telegram. The link's in the description. Let's go. First of all, accuracy isn't a guarantee. It's just a number. Beginners love accuracy. They think if a strategy wins 70% of the time, money is supposed to come. But accuracy alone means nothing if you don't know how much you lose on losing trades, how much you make on winning trades, and how you behave over a series. Trading isn't an exam of right or wrong. It's math, the math of risk distribution. You can win often and still lose money if your losses are bigger than your wins. And you can win less often and still be profitable if you control risk. 2. How you can lose even with 70%. The losing streak trap. Here's something simple. A 70% win rate doesn't mean you'll win every 3 trades. In real life, losses can come in a row. 2, 3, 4. That's statistically normal. The problem isn't the streak itself. The problem is what happens without risk rules. You start to increase size to get it back faster, trade more because I have to recover, break your entry rules because you're stressed. And that's how the strategy breaks, not because of the market, but because of your emotions. Risk management exists for one reason: to survive losing streaks without destroying your system. Number 3, the most expensive mistake: increasing risk after a loss. Classic, and it kills even strong traders. Loss, detention, the urge to recover, bigger size, and one bad day wipes out a week of good work. After a loss, your brain wants to regain control. That's biology, not weakness. But without rules, biology controls your hands. Risk management means you decide in advance what you do after a loss, and you don't negotiate with yourself in the middle of emotion. Number 4, risk management isn't earning less, it's staying alive longer. A lot of people see risk as a limitation, like it blocks profits. In reality, risk management is your ticket to the long game, because your main resource isn't your strategy. Your main resource is capital and a calm mind. If you can handle drawdowns without panic, you can keep trading. If you destroy your account in one emotional streak, the game is over. Number 5, 3 risk rules that make trading controllable. Here are 3 basic rules, simple but powerful. Rule 1, fixed risk per trade. Same amount or same percentage, not I feel confident today so I'll risk more. A system doesn't run on moods. Rule number 2, daily loss limit. You need a stop day, because the hardest drawdowns usually come not from the market, but from revenge trading. Rule 3, trade limit per session. More trades equals more decisions, more fatigue, more emotion. A limit protects you from overheating. If you have these 3 rules, you stop being a gambler. You become a manager of your process. Number 6, why even a perfect strategy loses without risk control. Because the market doesn't deliver results evenly. Even a strong strategy has drawdowns, and drawdowns without risk rules become a catastrophe. Professional trading isn't how to win today, it's how not to destroy yourself during a bad period. And that's why risk management matters more than any entry point. Number 7, a simple test. Do you actually have risk management? Answer 3 questions. How much do I lose on one trade? What do I do after 2 losses in a row? Where is my daily limit? The point where I stop for the day. If you can't answer quickly, you don't have risk management, which means you're trading on emotion, even if you think you're following a strategy. A strategy gives you probability. Risk management gives you survivability. You can have 70% accuracy and still blow your account if you don't control risk. And you can grow steadily with a simple strategy if you know how to limit losses and stay disciplined. If you want more breakdowns and practical rules that actually help in trading, check my Telegram. The link is in the description. Don't chase the perfect strategy, build your risk rules first, because risk management is what keeps you in the game.